Hello, everyone. Thanks for joining this live webinar from our Betting Table Talk series. Today, we are going to interview Ard van der Piel, who is a professional trader and broker. I don't know, Ard, if I pronounced it correctly.
Yeah, it's file, like translation is arrow.
Mr. Okay,
Arrow. Yeah.
Mr. Arrow. About alternative assets in general, because he trades pretty much from sports betting to crypto, to NFTs, to collectibles even. So feel free to ask questions. You can use the button ask a question below. We'll try to answer various questions. So Ard, would you like to introduce yourself and tell us a bit about your story?
Yes, thank you for having me, Carlo. I am born in Brazil, raised in Spain, and then went to the Netherlands. I was then my first touch of the markets was with my grandfather. He was always in the market with Royal Dutch Shell. That's a like a dividend mogul. Everyone in the Netherlands has that share. That was my first time I got in contact with the markets. Expanded more. My parents were entrepreneurs as well, and they make me smarter regarding investing and possibilities. So then I went did some economic schooling, and eventually worked or started at a broker in the Netherlands, in the south of Holland. We were bought by another broker, and there is where I work now. And in the meantime, I got more old and more experienced in trading. One of my specialties we had, due to regulation, it changed a bit, but it was like auto trading or automated trading. Like we have a fixed protocol when you send in orders, receive order confirmations back, and we did all kind of things like synthetic iceberg orders to the different market, to different brokers, and then we got executed for a lot of our clients actually. It was all automated. We were actually slow with. I think we had like speeds like 325 milliseconds, but that is actually slow, not very fast.
But which year was that?
I think that was like 6-7 years ago.
Okay.
And now the market changed a bit in the Netherlands due to regulation. I'm now. We were bought over again, and so I'm now working at Links Amsterdam, Links Brokers, and they're resided in Netherlands, Germany, Finland, France, and we're still expanding pretty rapidly. In the meantime, I got trading, like auto trading, like I said. I built some algorithms with a lot of people, and then I saw. In 2017, saw that the market was upcoming for crypto markets. I was more, instead of like yield driven, I was more like a risk driven events. So what do I mean? Is like the fix was more important, the volatility in the market, and this is when I became more an option trader as well. I trade all kind of asset classes really, like options, futures, forex pairs, shares, all kind of things. The only thing I don't really trade are bonds, but that's a different kind of market, I think. Yeah.
Too boring the bonds. So in you traded pretty much everything from sports bets to Bitcoin to even collectibles. You told me about Magic the Gathering. But before moving towards this, let's say, alternative assets, like this 2020 and 2021 have been like strange years in the markets, because we have seen the surge in cryptocurrencies. We have seen this craziness about the, let's say, socialization of trading with the GameStops, AMC, also all the new retail traders in the market, the the arrival of new exchanges, a new way of trading. So how was it to be also the COVID, of course, which is something that impacted everything. So how was it to be both a broker and a trader in these last 2 years?
Yeah, it was actually great. On the sell side, as a broker, we added a lot of clients, and it's pretty logical if you think about it. People were not spending in COVID era or times. They went out, going to restaurants. No vacations were allowed. So people were holding a lot of cash in their pockets. Interest rates are near zero. Banks not giving any no value for your money, and so a lot of people went online and started thinking, what can I do? What can I spend? What can I do online? And that was trading, and then cryptocurrencies came. So it went all in the markets. And a lot of people lost a lot, I think, at the drawdown when COVID came. But as always, there is a time where there is a fear, and the start of a fear or the end of the fear, I expected it pretty well, actually. When everybody talks like this is the end of the world kind of thing, then your mind must be thinking, or I lost so much money, I want to sell everything. That should be a mindset to know maybe it's do the opposite and start buying instead of selling.
Yeah, it was what Rothschild said. You have to buy when there is blood in the street. Or was it Rothschild or someone else? I don't remember, but
yeah, it's and I know it's a saying, and everybody can say it, of course. But when you're in the market and it's your money and you feel it, when you really feel it, you have to be experienced to feel it like that. We're not machines; we're humans, and that's how humans are built. A loss of fear feels twice as heavy as a gain you have, and that's why psychology is very important.
Did you manage to capitalize on this new surge of crazy speculative frenzy from this new crowds of retail investors, on this new huge increase in volatility on random stocks unexpectedly, like GameStop, for example?
Yeah, actually it was, and it's also started with GameStop. But like if you bought everything, what was pretty unknown, like pink stocks. I saw pink stocks. What was like 1/10 of a cent went up to 10 cents, or like Russell 2000 shares. Everybody bought them because they were cheap, and like it's nobody looks at value anymore after the FOMO kicks in, or frenzy, and then it all goes up and everybody wants in, and then you see valuations way above like pre-corona time. And some of are logical, some are not.
With the Fed printing money constantly, there is like a bigger chance that you have a rise in stock prices by people having more money in their pockets, and also be borrowed at home. But in general, which have been in these 2 years the markets you liked to trade the most?
It was for me like the shares that went up after the dip. Everybody was thinking at that time the market, the end of the world, buy shares, and it doesn't even matter what kind of shares you bought, actually. Then came the tech era, kind of the tech moment with cryptos, GameStop, MicroStrategy. And
like also ARK, there was all the ARK saga.
Of course, yeah. It's a marketing machine. Don't forget it, ARK. She uses what she says she stands for, and that's what I like. Even if it's not realistic, maybe, but she says it and she does it, and she's on the right side, because everybody is against ARK right now. It looks like But
I am a skeptic on ARK because like they have too much shares of the same companies. So if the stuff crumbles, it crumbles really, really fast. So I'm kind of an ARK skeptic. But for sure, if you bought in the past, you would have made a lot of money just by front running what was coming. So for sure, I was on the wrong side of the trade up until now.
Yes, and for me, it's also I was never invested in ARK because I like trading in the Bitcoin itself then, or other tech companies itself. But I can't be right all the time. That's impossible. Not, neither can I or somebody else. Everybody loses money as well on trading markets.
Yeah,
and
absolutely.
the thing in investing is, and I say to everybody, it's not only shares, it's also NFTs, it's crypto, it's maybe art or wine or gold, physical gold and silver. It's a combination of what you do, and that is key. Wealth always changes or goes from one investing opportunity to another. Then it's bonds, then it's shares, then it's tech shares, and then it's cryptocurrencies. If you trade only the halvings or the years of the halvings on Bitcoin, you would have been very successful. And it's an event that looks like coming back every time after the halving, the year after the halving, and then the best parts are the 3 months, the last quarter actually. Yeah, why is that? I'm not sure, but it looks like it's built in the way the technology is set up. But yeah. I think still, if everybody sells Bitcoin, it goes to zero, and if nobody wants it. But I think there's value in the network, and a network has value, especially with a lot of users. But how much is that value worth? And that's the discussion: is how much is a Bitcoin worth?
That is a difficult question. Like in my opinion, I'm quite skeptic. You know, for me, like the value is around what you can buy in the deep web. You know, nothing more, nothing less. But I'm not against the blockchain technology or cryptocurrency, but for Bitcoin, I'm still skeptic, and it's really difficult to value. So, like, what is a dip in Bitcoin for in your opinion? Like, when do you feel it's a dip? It's the $1 million question right now.
Yeah, it is, and it's always. I can't tell you if this was the dip or not, but I think it was a good buying opportunity, and you don't have to be the perfect timer for this. But the thing is, I got two different styles of trading. I got for cryptocurrencies, I got a long term and a short term. Long term, I was already in 2017. And I'm a very good hodler, as they say. So I was holding my position and holding, and I didn't care. And it turned out very well. And if you have a long-term view of cryptocurrencies, some of them, not all will prevail or will hold on, or they will go bankrupt or whatever. But I think like the most famous ones will be still there. But if you bought Bitcoin at 50K, I was thinking when I saw these prices, I was like, whoa, like insane, 50K, 60K. But I was also thinking, who would buy a Bitcoin right now? And why would you do it? Then you have to believe it goes to like 60, 70, 80, 90, 100. I'm not sure. And then you have to know, like, are you going in it for the long haul? So is it a long only strategy, or do you hedge with options, for example? But that's very risky. Options on Bitcoin, everybody is scared of them, but it's the same as trading options, right? Everybody does on the regular exchanges. It's the same with, we have a delta, you have the prices, you have volatility, and that's how it works. And you can hedge your position if you want. So yeah, hedging is something a lot of professionals do hedge. They're never naked in the market, not only long or directional. If they say, I like being directional because I know what I do. But if I want to trade options, I always or almost always are I am hedged. So long, selling the option, call option, buying shares, or vice versa.
Yeah, there are when I did my exams on options and markets, studying the big hull of derivatives book, like there are a lot. The hedging is not like it's more. It's not that straightforward as a philosophy. There are two philosophies in hedging because every time you hedge, you are giving away plus EV. Like for example, in the sports betting, when you do an arbitrage is between two books, like for example, Pinnacle and Bet365. One of them is right in pricing the event, and the other is wrong. So if you accept the volatility, you will profit much more by taking just on average the side which is wrong. Simply, the problem is you don't know which one of the two is wrong in the price. So hedging, in my opinion, is a bit tricky topic, and I would like to know how you approach it in this crypto space where the volatility is that high, for example.
Yeah. I read something about somebody who says like it's free money, and he says buy the spots and sell the December Bitcoin future, and because it will the Bitcoin future will tend to go to the price when time decays.
Okay.
And in the meantime, everyone expects it to go higher, and you got free money when they cross each other. You have the optimum premium kind of, and
Okay.
but it's a simple strategy, but it's a hard one because I know a lot of people don't want to trade futures or are a bit scared of futures, and they should be, because it's very volatile. You have to know what your max risk is, and you have to know what you're doing. And like professional market makers are doing it. They know what they're doing. They know how much risk they can, and even they make mistakes, or there are events that not tradable anymore. Like I know a market maker who told me about the Volkswagen squeeze, and they were like losing 1 million euros on it because nobody would expected it. You can't trade against something like that. It's a black swan event for that specific stock. It went up from like 100 euros to 1,000 euros, and then go back again to 100. But in the meantime, when these participants are buying and hedging, an option with so much volatility keeps staying very expensive. So the market is not working theoretically anymore. And that's the thing you always keep in mind with trading options or futures, more with options, is that when volatility is high, you like to sell premium. And that premium comes to you. You will earn a premium when volatility goes down. The inflation of the option goes out, so the air leaves the option and it will get less value. And that's what you want when you sell options.
Speaking about the option, Ard, you have been a customer of us at Mercurius. Probably the people who are here knows already about us. We have this value betting bot, so we are in the betting market. And when we were talking some time ago, you said me sports bets are the same as option, and of course for me as well. But probably the people watching don't know much about sports bet, the parallelism between sports bets and option, and you have been betting yourself as well and use the sports betting as an asset. So how you see sports betting as an asset class in this universe of stuff?
Very good question. I was sports betting myself a bit. I was like how things are working, reading a lot about it, and then I saw the standard deviation scale, and I read about some risk parameters. And then you guys came along, and it was auto trading on Betfair, and I like auto trading, and I liked sports betting, so it was I liked it very much. I liked your strategy. You're mathematicians. You know what you're doing. Performance is something is a result, but maybe I saw a lot of games in the Netherlands that almost were so perfectly bet by your system that I was like, it's incredible that this is possible. I liked it very much. But even then, in the 94th minute, another club scored the 2-2, so the draw instead of the win, and the whole bet was gone. But still, you were pretty close that the underdog should win of Ajax, I think #1 at the time, and that's very special. I think then your systems are very well and need to be tweaked, like some points maybe, but there are events in sports betting that are not possible to account for.
No, as you said, it's like buying options. So you have always a big volatility, because when you win, you cash in quite a bit, but you have in our case, at least, because we find that typically value in the underdogs, we have more losers than wins on a win rate percentage, but the winnings, of course, pay more. But yes, the Netherlands League also this year we didn't trade it a lot, because the liquidity wasn't pretty much there. So this year was pretty sad on the Eredivisie. But you are doing like sports betting yourself. How are you treating your decision making in the betting world?
Like the same as in options trading. I want to know if an option is what's the probability an option will get into the money. Jeff, I'm not sure if all listeners are acquainted with options, but if you sell an option, you have a delta, and the delta tells you how much, what is the probability it will go to zero, kind of, when it's worthless. Then you earn money when you sold the option. And in sports betting, you see the same. It starts at, for example, 2.2, and when your team is winning, it goes to 1.50, 1. I don't know.
Depends. Pretty much it depends from the minutes also of the game, which team is winning, if there are stuff. But yes, there is a time decay on the bet.
And for me, for example, when I want to be like with an 85% the draw match, I like it to trade like a draw match, but it's not a lot of gains. So for example, the bet you get is 1.20 or something. It's a 85% probability around that, but with draw games, it's pretty okay. And that's for example, I like to trade, and it's in the same delta as in options. There's a 80 or 85% probability you will earn what you expected to earn.
Yeah, but in order to compute your fair odds, let's say your probabilities of the event in football, what do you do? Because, like, for example, we do odds compiling by ourselves from big data. There are others, like me in my personal life, I check the markets and see how prices are moving or are offered on Pinnacle, because in my opinion is the sharpest in placing odds. What are you doing? Are you like relying on like local news, for example, from Nimgen or some lower Netherlands cities like that probably are not discounted in the market? Do you know the teams, or which is your approach in computing these fair odds?
Pure price, actually. And in live trading, I never bet on upfront on a game.
Okay.
And it's like what I do in my trading. I'm now in the market, but tonight I don't have any positions normally. I have some positions; they're on a little loss, but I let them go. They will come back to me. I'm pretty sure, or if not, I can handle them. But normally I will sleep very well, because at the end of the day I have no positions. I'm flat, no positions. And but that's my day trading portfolio. I have a portfolio with my cryptocurrencies, or like bonds and shares, kind of an ETF fund, so I'm invested totally, and I have some cash, of course. It's also an asset class.
But talking about strange asset classes, it came out that we were speaking the last time. I mentioned you that also collectibles are an asset class, and we talked about Magic the Gathering. Also, there was this, for the ones of you who don't know, Magic the Gathering is a collectible card games. from Wizard of the Coast that was bought by Hasbro years ago. And some of its cards, it's from the 1993, went from like few dollars to 40 grand. Okay, and there is a big, massive market that few nerds know. Okay, and last year some cards were banned due to Black Lives Matter things, and they spiked in price. So it was a kind of interesting. Me and Peter Sainsbury wrote an article about it that you can find on our site. And we found that me and Dad were talking. I found out that you also were already invested in Magic the Gathering as well, which is the kind of fringe and niche topic. So how did it came to you, and what do you think about collectibles as a form of an alternative asset class?
Yeah, like in sports betting, that I didn't mention yet. I liked your system because it works. It works good. I gained more than I invested. So that worked fine. I had periods with drawdowns. I wasn't afraid because I knew what the system could do. What I wanted to tell you is that it's sports betting is an asset class that if the markets tank like 80%, like in Bitcoin, sports betting is an asset class that doesn't tank like that. Yeah. You have your money. You only when you bet you win or lose, and that's the risk and nothing more. So therefore, it's a great asset class to have beside the rest of your investments. And I really think that's one of the asset classes. It's actually weird that so less people use it as an asset class.
Yeah, sports betting is because it's difficult to use. So if you go without knowing what you're doing, you are always negative EV. Yeah. So you will lose money. Like probably you will lose just the VIG of the book. So let's say that you are betting in Pinnacle, you are losing at 2% per trade. So it's possible that you lose less than other stuff, but you need to know what you're doing. So probably this is why it's not yet famous, yet mainstream. Like it's more a job than an asset at the moment. This is why we are trying to automate it. But yes, the cool part is that at least it's uncorrelated with the markets. Which is important.
Yes, true. Yeah, and in addition to that, I found a friend of mine was a Magic card referee, so he knew a lot of things about Magic, and as I do with every asset class, I read a lot about it. I hear a lot about it. I'm on Twitter. I'm very focusing on what news group or what person I need to follow to digest the information I need. It's very important, I think, to have the right people, not only crypto people or anti-crypto or everybody, and news feeds, regular mainstream, not mainstream, etc. And what I saw is like, for me, it was a Google trend in my head. Some people were talking about cards or basketball cards or other collectibles, but that was already 2 years ago, actually, and I didn't do anything with it. If I did, I made more money. But and then after some more research, and I heard it more often, I was like, hey, this is going to be an investment opportunity, because I hear more people about it. Prices were already rising. And so I talked to this guy I know, and he was stopped being a referee, but he played with the best of the best worldwide, going to tournaments. And I don't even know how to play Magic. I know it a bit, but I know I'm a better investor. I asked him, what are the most famous or boxes? And boxes go between like $250 until $50,000 right now. And he says, if you can buy Magic card boxes from between like 1990 and 1998, these are pretty rare, and they will get more in value, and that's how I got in. If I found another guy who is more acquainted with basketball playing cards, then I should have bought maybe basketball cards, but they are like to the roof again. Like one sold for 10K like 1 year ago, and now going for 250K. It's incredible, and it all has to do with the rising Bitcoin, people want to get paid in Bitcoin. If all markets goes up, everybody's more positive, more relaxed, better. It's easier than to invest in this environment. Actually, people are cautious, but the upside is there. Even I know everybody expects a down turn after this long going up, but I'm not so sure.
Yeah, like as I was reading from his name is Kupi, is like an asset manager from Florida. He has like a blog which is Adventures in Capitalism, which is really beautiful. And he said like, this is Project Zimbabwe because of the fact that it's printing money, but you never short Project Zimbabwe because like effectively, yes, on the, let's say, rational side of things, they are printing money. And everyone is expecting a crash and that is a bubble. But in the end, it's still going up. And no one can forecast a bubble. Like you can't time it. So it's pretty, in my opinion, at least. Also, I come from sports betting, so in my life is more about, I know where my edge is. The edge is on the price. The edge in that. Probably in the stock market, you have this feel that probably the edge is that someone is printing money for you. So, but you know at the same time that money can't be created by out of thin air. So it's a strange relationship. Like for myself, like I buy the dips and hope to sell them higher. And that's it. Like I'm not shorting because I don't want to go against Project Zimbabwe, but yeah. So
Yeah,
it's
a good thing you mentioned actually, because there's so much money in the world. There was COVID. Many people had some extra money. Spending was going down and down and down, and now they're talking about inflation. But is it really inflation? Is it not temporary? Because now production needs to be started. So there a lot of commodities need to be bought. So I heard timber went through the roof, like wood. Steel prices, everything, copper, all commodities are expensive. And isn't that related to the market? They ask, and the ask and demand, and the market is demanding a lot of things right now because we're getting out of the out of COVID. We're going to start up all economies, traveling, everything, building, everything. Is it going to be inflation right now, or is it temporary demand? What we're asking from the world economy, and if so, will it then change to inflation really? Because I think prices surged, and due to demand problems, they surged, but they will rise maybe a bit more. But will they rise more or not? And that's the tipping point right now.
Yeah, it's kind of complex. So another question I wanted to ask you, like, so it's already a lot of years you're doing this job. You saw a lot of stuff. So you saw all the markets being in 2008 with the crash. And now you're seeing this really big bullish run. The new come of let's say the new financial instruments like Bitcoin, cryptocurrency. You also have experience with these different asset classes like sports betting and collectibles. So how your view about the markets change across these years? So what is the biggest change of your way to approach the market, which you changed on your behavior?
Dare to sell when things are turning around. I think it's a human error built in with investing, that we don't want to cut your losses or cut your position, even with a decent profit. Like I said, money is turning from one asset class to another, and when you think about it, it's pretty logical. So it goes from money that needs to be invested somewhere else, and it goes from commodities to new markets, it goes to South America, it goes to tech, and so it changes. Yeah, the real I'm so into the markets because it's my work. It's my for me. I can see it daily what's happening. But on the long run, you have to also be patient. So it's two kind of different things. What is your horizon? I'm not the same investor as you are, and not everyone is the same as me. But if you diversify, not too much in every portfolio you have, but diversify in totality, I think you're a good investor. And the timing is really hard. I know pretty good how to time, but that's because of my experience. My software I use, the details I see in my software, what tells me we're bottoming out. I dare to buy a market. I dare to buy market dips. But who dared to buy really? I know a lot of people who said I bought the dip, but did they really? How much sold the dip? I think much more. And that's again, it's a feeling everybody has what to do and what not, and it's very hard for retail investors what to do when something happens, and you have to write them down actually. If you plan, if you write down your plans and stick to them, it's very hard, but that's a real good thing to do for a retail trader or investor.
It's really difficult to buy the dip. Like since when you see it on the paper, it's like easy. Oh, you buy when it's low. But when you have to buy and something is crashing, like I remember when I bought AMC, that was like down 95% since the IPO. Like, and you have to buy something that is pretty much bankrupt, to buy and you look at the dip is like looking in the hell, like I'm throwing away this money. While when you buy the high and you see, oh my God, it's Apple, it's keep going up. Look, if I buy, I want to be the last fool to buy the greater fool, the greatest fool. I want to be the greatest fool, and it's more easy to buy, like in a sense. So like also this connected to the question of Plaza. So yes, you buy the dip probably, but it's difficult to buy the dip psychologically.
Yes, correct. Yeah, correct. I got a tip for traders. If they see a parabolic move up, the timing is very hard. But I can tell you that when it's really going parabolic. So if you think it's going parabolic and you wait like 2 or 3 days more, then it's a good time probably to if you know market structure kind of and price, then it's a good tip to probably think maybe this is a bit overbought. Is everybody positive on Twitter? Is every positive anywhere on every blog? And it's going parabolic, then it's a good time maybe to say, yes, I'm going to short it right now. Be careful what kind of stocks, like biotech, it can go from 30 cents to 1, and that's parabolic, but also going from 1 to 12. So you have to be careful what kind of stock. I never touched AMC or GameStop. I don't like crowded stocks. Maybe for a setup, for like a strangle option strategy. So I know within kind of with bandwidth, I can trade this share within a particular time, but nothing more. It's also funny. I traded one tip from the Wall Street Bet group actually, and it was very profitable. So
but there are some gems to be found. If you scroll really between the sides, there are some also really, really smart guys from the high level financial industry to shape.
Yes, and they were there as well, I'm sure. And I also profited it because I read a lot of shares I saw on the Wall Street Bet group, and what I read was this share, that share, this share, that share, and one was actually a Majestic.
Silver Corp. I have also it as well.
Yeah, and I was looking at the option, and it was only like priced for 5 cents. I was like, everybody was talking about it, and there was no volatility. The volatility in the option was so low; it was incredible. That was the perfect time to buy. That was a like once in a lifetime opportunity. Not really, but it was a very good opportunity because if you know the market structure, everybody is positive on the share. Everybody was super positive, and the the share was doing anything. So the options weren't doing anything. One day later, everybody bought the share. Options went up 250, like 500%, 1000%. So you have to be careful, of course. I don't like crowded trades. I really don't. But this one was a try, and I looked at the option. And I was like, this is cheaper than expected. And then because I know market structure, if you do something like buying options and you don't know which one, or you don't look at volatility, or you sell, kind of a tip also, normally you sell options when volatility is extreme or high. You buy them if it's slower. Not always depending on your strategy, of course.
We have a question from Kamal Deep, who is asking, is passive investing in ETFs better than active funds, or is a consistent alpha possible?
It's a very good question. I do both, actually. I have a kind of an ETF strategy. I put in 100, a steady amount every month. I put in. I don't look at it. I don't care. If the market dips, I buy more, because it's a long-term portfolio. It's a portfolio for me, like for 20 years, 25 years. I don't care. If it's going lower, I buy cheaper. If it's going more lower, I buy cheaper again. If it goes higher, I make more money. I don't care, and that's perfect. What you're doing. I think if you have a long-term portfolio with ETFs, you don't have to beat the market. You're playing the market, but you have to invest every month, I think, and you will be positive at the end, 100% sure, no doubt about it. And if you even can have some extra money, like COVID, I did it as well. I put in some extra money because I was like, everybody is worried, everybody is afraid of this market. Now can I put in some extra, not too much, but some, and that's our buying opportunities then. But for the long term, you don't have to be afraid, and that's easy investing. You're sleeping well, you're doing very well, and besides that, of course, like I said before, I diversify. I like other investments as well. Sports betting, great. It's a one-day event maybe, but still, it's diversified. I like day trading myself, but day trading has nothing to do with my ETF portfolio. I don't even look at my ETF portfolio, actually. I don't even care. And that's what I like about ETF portfolio. Like a simple one is like 30% bonds, 70% shares. It's good. Keep it all your life. And also that's a bit of a standard when you grow older. Now it's 30-70, like 30% bonds, 70 shares. How older you get, the more peace you want. So the market volatility you want, it gets lower when you want to stop working for it. So the level of bonds and shares will be like 30-70 again. So it will change, and they will cross at 50-50, and then at the end you have 70% bonds and 30% shares, because you don't want any volatility anymore. When a market crashes, you don't want to end up losing everything. Yeah.
I'm kind of different on the ETF side, because in my opinion, there are two problems with the ETF. Of course, you can't become poor by investing in ETF, but I'm of the idea that I want to know where my alpha comes from. So, for example, I don't want to rely on just buying shares and hoping that they go up. And for that one, the first point. The other problem I've got with the ETF is that everyone now is investing in ETF. So if they crumbles, and the demographic which is investing in ETF, there was a beautiful episode on Hidden Forces podcast where Mike Green was talking about it. So if now that you have this big chunk of ETF investors, that when they will go out of the market because they will become pensionable, they will exit the market. Prices will really go down fast because the exit door of the theater is the same for everyone. So probably more than buying now ETF, you should do some like active management in waiting to buy the ETF once they crash for the others, when there will be this big chunk of pensions of people getting into pensions. So ETF are good, but in my opinion, your time frame must be your entire life. Am I correct, Ard?
Correct. I think your lifespan for ETFs must be minimum 10, maybe 15 or 20 years. Yeah, correct. I think so. And you're right. There were some papers I read about ETF markets. They were so big that and it actually happens with the flash crash as well. There were some ETFs wrong priced. There were ETFs were priced wrong. No market maker was touching them anymore. So that's what happens when everybody wants out at the same time. But even then, it will recover. But because there, at one point, eventually there are buyers again, and every market, even if it goes to zero or almost zero, there are almost every buyers in a market frenzy. It depends, of course. There are events that are different, but normally yes. And an ETF is a basket of shares, and if you have a basket of shares and a good part of shares like Europe, Asia, you're diversified again. And I maybe I'm not talking about SPY, but like more different ETFs, but not too much. Like a group of 7 ETFs, which two of them are bonds, are shares.
Donation from Lorraine, founder of Mercurial. Can you were on the right, but for the wrong? How did you act?
I have some problems regarding the sound.
Say, wait, because when try to refresh. Okay. Now, can you hear me?
Yes, I can hear you. Yeah.
Now it works. Okay. So we have Lorenzo who asked, can you recall a situation where you were on the right side of a trade, but for the wrong reason? If so, how did you act then?
On the right side of trades, but for the wrong reasons. It's a good question, actually. Yes, I have a strategy that buys into when I'm trying to time the low with my software. Sometimes this low is getting lower and lower, and now I'm on the wrong, actually on the wrong side, and then sometimes I have to take a loss. I'm really wrong there because it's not going up again. On the right side of the trade, when I was is when I was long for a position and it went up straight away long. My system wants to buy some more futures and then and end up buying later when I have more exposure. I want to have more. I can have more profit as well, so my timing is better. And it's not a real good explanation of it, but it's a very good question actually. I didn't expect it. It's a good question. I have to think about it for specific reasons, because as a day trader, I can cut my losses, and I cut them pretty fast as well. I'm not attached to anything actually in the market, and that's what I like. But I know a lot of people are angry or get scared or when they lose, and in the opposite, yeah, I had some trades that went straight up, but for the wrong reasons, yeah, because I didn't expect it to go up straight away. Actually, yeah, they were in my favor.
But still is good when it goes in your direction.
It is, yeah, it is, but not as expected as my software would tell me. Like it goes the other way, but like I said, and it's always like technical analysis is used a lot with trading, and it's the same in cryptocurrencies or in every other forex market or share market or whatever. Is if I draw a line, it doesn't tell nothing about the current market, and a lot of people forget it. Actually, they think their line is a structure, and I like technical analysis because there are some mathematics formula in it, but they're always lagging, and a line will never tell you something about the market itself. I was in a training at a market maker, and he told me this line: if I sell 500 futures on the Amsterdam future market right now, it will go below your line. So you don't talk me shit about your line. It will go lower. And he was totally right, of course. You don't know market participants or what participant is doing at what time. So the technical analysis is not a holy grail, but you can use it, and maybe use it in your advantage when you use like technical analysis in combination of like company analysis as well. Are they making money or not? Maybe it's a good thing to use both.
Yeah, I don't like it. It's, in my opinion, is more like a self way to psychoanalyze to yourself. When you are trading, like it's more a meditation thing. Doing a technical analysis, it helps you not being in a rush because, and also to free yourself of thinking. But it's not, in my opinion, a line on the graph which dictates where markets will go.
Never. It will never predict. Everybody wants to predict where markets go. I don't care where a market goes. You have to trade it, and if you trade it, you have to know where to go in, where to go out exactly, and you know what your market exposure is maximum on that trade, or maybe multiple trades. Then you're trading. Then you know what you're doing. But please don't allow a line on your market hypothesis to think that is going to happen. No, it will probably not. But it's good if you know what you're doing and plan your trades. Please do it. Yeah.
We have a beautiful question from Anto, which is for you, Ard. How are your investments divided among stocks, betting, cryptos, and others, both in terms of money invested and time spent analyzing the markets? So how is it the Ard portfolio?
Yeah, I understand. And like the stocks, when I talk about stocks, I like one portfolio. In one portfolio, I day trade, or maybe swing trade max for a week, but mostly day trading. I trade future stocks, everything in that portfolio. That's the regular market, kind of regular regulated market. So the Amsterdam market, future markets, US, okay, that kind of things. This is one day trading. It's there. Then my stocks or bonds and ETFs, actually, that's a long-term portfolio. I'm building it. Like, for example, if you put in 100 euros every month, it's building and building, and you have to keep doing it, like for the rest of your life. And I started even too late, I think. But I will tell my kids to do it when they're 20 or 18 to start, if they can, of course. And then you have like cryptocurrencies. I got a portfolio I built in 2017. I bought and I hodled it. That's it. And also do some day trading with a smaller portfolio on the cryptos. And it's also trading the way I do, the same as the day trading and the regular markets. It's the same. And prices, I don't care what price it is, actually. All assets are the same. When you see a graph or when you see an asset, you can trade it on a market. It's the same. And how much money divided? I think like it's hard to tell, but I think most is in day trading. Cryptos, it became very, very big, actually, bigger than I expected it. So like everything is around like 20%, and I was like sports betting maybe 10%. So yeah, something like that. Yeah.
Out of curiosity, have you invested in some NFTs recently? Because there is now this new, I would like to call it bubble, but I'm more pro NFTs than crypto because I understand that the collectible side of things.
Yeah, understand. Yeah, good question. I'm very new to NFTs, so I'm not sure what to think about it. Firstly, I like the concept of buying something digitally, but I also don't know what is the value of a product. Is it because I know an artist actually, and it's a good artist, famous artist right now because he sold his NFT. He became a millionaire uh, uh, due to the cryptocurrencies. Otherwise, he wasn't a millionaire. So is it due to the rise of cryptocurrencies he get more for his art, or is it he became a better artist? It's always a discussion point. I think he didn't become a better artist. I think he was lucky. There are NFTs now, and he sold them with Ethereum, and it's in the blockchain that the owner is the owner of that NFT of him. But there, I have a lot of questions as well, and these are kind of the same questions as are like, because I saw the other question as well. Out of the 10,000 cryptocurrency currently out there, how many are scams? I think a lot of them are scams or not going to make it. Not probably scams. That's not hard to say because there are working people on real cool things. But is there really a market for it, or is it popular right now to have a cryptocurrency, or are talking about blockchain? And that's the same with NFTs. That artist made a lot of money because cryptocurrencies are rising, and people with extra money were able to invest in his art, and now he earns more because of his better art, or is it due to popularity? And that's the same with cryptocurrencies, and it's the same with a lot of shares. It's like tech shares in the 80s. I told my mom and dad as well, why didn't you buy Apple? Why didn't you buy Amazon? But it's actually stupid, because in the time that Apple started, there were 200 computer companies. Now, where are they now? I think they're like 150 of them don't even are there anymore. So then you have to pick the correct one, and that's never possible to correct, to only choose the right one in history. Maybe you're lucky, then you could. I know an investor who bought Tesla at $15 or something. I know them, but that was it's a rarity. So you have to diversify to have Apple on your portfolio, and then you're on the good side. I was pretty early with cryptocurrency, and of course I bought Bitcoin, and I bought XRP, and I bought Ethereum, and that's what I like. Still, I like the most. The top three, I kind of, and there are great other projects actually, but even like 2017 and 2021, it's like 4 years, but I feel old already. I'm more acquainted to the cryptocurrencies I knew 4 years ago, and now the new ones I don't really know. But there are great projects in there, but a lot of those cryptocurrencies will not get it, will not make it. And probably of 10,000 cryptocurrencies that are out there, I think really maybe 1,000 will make it, maybe 2. I'm not sure. And I think there is a market for it. Also, like when I think in my vision about cryptocurrencies, I really think of it as a market where we can exchange everything for everything. So I want to exchange euros for Bitcoin, or my points with my supermarkets, or maybe the points I got by buying petrol at a station, and it's all intra-convertible. It's swapping. I think that's the future, and we don't care anymore what value, what has, or otherwise we exchange it, or others will arbitrage it, and that's a free market actually.
We have a last question from Anto, who is asking, do you do everything alone, or you have workers? Do you collaborate with other traders daily?
Yeah, it's a good question. I do a lot of things alone, but it's easier. I don't have workers for me because, to be honest, I am sitting a lot of my screens, and I have like 10 screens. I can check a lot of markets at the same time. The only hard work I do is using my fingers, but mentally think a lot and read a lot. So decision making is the hard part for me. I got a lot of information and I have to know how to put it in value. And yes, of course, I have some ideas of maybe working together with some of the people and bringing ideas together to do things better or build a company, but that's not yet, not at this moment.
Oh, we have another question from Anto. Do you have a company or you pay taxes as a physical person? If yes, in which country?
Yes, I discussed it with Carlo as well. Netherlands is a great country to invest, actually. We have like 3 tax pillars. 1 is for income, 2 is the second pillar is for like income if you're from a private company or shareholder of a private company, and the third one is investing. Because my main income is still my work, so I have an income in pillar 1, then I can put all the rest of my investments in pillar 3, and pillar 3 as a max taxation, and it's pretty low. We don't pay taxes on profit. We don't pay. We only at the beginning of the year we tell this is my value of pillar 3 in the 1st of January, and everything what happens between the 1st of January and the 31st of December, the tax don't care if I make money or not, or lose it, or we don't pay taxes on gains, and that's great. Netherlands is a great country, and I work at a brokerage firm, and we see a lot of clients from different countries, but especially Belgium. They have a lot of taxations, financial transaction tax on trades. They have extra taxation on dividends. They have all these kind of things we don't have. We have a taxation on dividends, but it's 15%, and that's it. And we know it. That's it. The rest we don't actually care, and it's good. A good investment atmosphere in the Netherlands. But I do it as a private person, especially private, because for me the taxation is so low as a private person. I wanted to keep it that way as long as possible.
Yeah, of course.
Yeah.
Okay, I think we answered all the questions and we hit the 1 hour mark. So thanks a lot for being here, Ard. It has been a pleasure of mine hosting you. Hope to have other chats with you, maybe with new assets coming out in the market. So Ard, if the listener would like to reach out to you, where they can contact you?
Yeah, you can reach me by contacting you guys, Mercurius, or you can contact me by at Twitter. On Twitter, it's Art Aguila.
Okay.
Or
I will place it in the description of the YouTube video so that if someone wants to get in touch can.
Yes.
So thanks a lot to everyone, and see you in the next episode.
Yes, thank you very much, Carlo. Thank you for having me. It was great, and success with all your investments.
Thanks a lot. Ciao, Ard. It's been a pleasure.
Yeah, same to you. Cheers.